I guess I'll do just a quick intro here. We're the Boyd Institute. This is Cameron Murray, an Australian housing economist, among other things. We found you via your Substack, which is very substantive and over the past few weeks, I've read a good deal of your work. Um, and I thought it'd be interesting to have a conversation. We've been having frequent conversations with people both on who are extreme on the extreme YIMBY side, and then also a little bit more skeptical of that. We're talking to Mike Feldman next week, who I know you spoke with. Um, so we're trying to get sort of a range of perspectives as we go into the final like 7 or 8 weeks of our housing policy sprint. So we're really excited to talk to you. And with that, yeah, Peter, do you want to kick it off?
Yeah, sure I can. So I think we found in the interviews that the most productive way to start the conversation is by just asking first if you think that there's a housing crisis, and conditional on yes or no, kind of how you frame the question and why you think that way.
Wow, okay. Yeah. So if you think a housing crisis is something like the housing market behaving abnormally, then no,
Okay.
right? And I think that's a really important starting point, which took me a long time, I'll be honest, to truly properly comprehend, is that there are forces in the housing market, basic economic forces that constrain what is possible and what is not, regardless of tinkering with planning rules and tax settings and this and that, right? And the housing market is also, it's not just like the market for mobile phones or t-shirts or something, right? It is basically a quarter of the economy, right?
Mm,
It's a quarter of the whole economy. Um, Nearly 10% of people work building and maintaining houses, right? So if we think we can do things like, oh, let's double housing production, I'm like, where are the 10% of people going to come from to do that? What are they going to stop, producing to do that? So you've got to recognize it's a big part of the economy. There are certain forces that constrain what prices can be and what they can't. Admittedly, there are cycles in it too, and we are in that. So in terms of a crisis, are we in a crisis? I would say we are in a cycle, which is also a normal part of the housing market. And, a lot of the things we think are the forces that constrain housing, like, oh, it's population, it's this, it's that, they're the wrong ones, right? So I'll cast your mind, a famous visitor to Sydney, right? Famously expensive city in Australia, wrote in their diary on their first day, the number of new homes recently built is truly surprising. Nevertheless, everyone complains of the high rents and difficulty in procuring a house, right? That wasn't Taylor Swift last year in the post-COVID boom. That was Charles Darwin. Charles Darwin, father of evolution in 1836, when the population of Australia was 19,000 people. Town planning? No, non-existent. Taxes on property? Non-existent. What was the problem there? Well, the same forces existed then as they do now, and if we understand the right ones, we'll understand what's happening. So I'm happy to define a crisis, and
Yeah.
maybe there are certain elements of people being left behind during periods of economic adjustment, and that's always been true, right? In the 1890s, it was all about the puzzling coexistence of progress and poverty. But to diagnose this as, oh, something specifically in the housing market has gone wrong, I think misunderstands the housing market.
So I guess when,
that's
when I think about this, sorry, well, I just ask a
no, you're
follow-up
fine.
question. When I think about the conversation around the housing crisis, it seems like the way people normally describe it is that like we're spending too much of according to some like platonic ideal of low amounts of money spent on housing, we're spending too much, right? And if I put my econ brain hat, you could be like the market is clearing, people are paying what they can afford to pay, right? But but
Mhm.
but it does still seem like we could change, I guess, that percentage that people are spending on housing in terms of like you could lower it down by shifting the supply curve. Is that do you agree with that? Do you disagree with that? Do you think it's like a misunderstanding something?
Um, I think it's a misunderstanding because
Yeah.
the supply curve is not a quantity, it's a willingness to trade, right?
Mm.
We have more houses today. Like if I try this thought experiment sometimes. Imagine going in a time machine back 40 years. Apparently, that's when housing was cheap and abundant or something, right? Maybe 50 years. I don't know. Pick a spot. When you actually think about this, it's very hard to actually come up with a time and a place where you'd go in a time machine where there was abundant housing to tell them about the future. Regardless, let's just do my lifetime, go back to 1980-ish. And you told them, hey, guess what? In 2025, there are only 2.5 people per home. Homes are 50% bigger. There's so many more of them. They're better. They've got more bathrooms, bedrooms, air conditioning, garages. There's more of everything. We have more cars. They're better too. They would say to you, great, sounds like the supply curve has moved, right? You've got more housing per capita per everything. And you go, but yeah, there's a housing crisis. They'll be like, it doesn't make sense. That's
Yeah.
just stupid. You're wrong. Because that's exactly what people are telling us now is the long-term ambition for low prices. Exactly the future path that happened the last 40 years. So I think if you want to fight economic forces, you have to prevent trades that would otherwise occur because we are a rich society. And rich societies like to spend money on things. That might be recreation, holidays, cars, but do you know what else? It's houses. And unless you prevent the people from trading those houses, you're going to get to where the market price is, regardless of the overall quantity. Because, if anything that's good for a buyer, a seller is just another entity that has the same economic options as a buyer, right? There's nothing you're going to trick them into going, oh, hey, for you guys, owning a house, that's a bad thing. So you sell. For buyers, owning a house is a good thing. So you buy. Well, if it's good for them, what makes it bad for the seller? Isn't it
Yeah.
also good for them, right? Prices are going up. Great. I'm a seller. I'm going to stop selling because I own a thing with the price going up. Why would I sell that? Right? And there's those type of forces are what generates the cycle and generates the long-term pricing as well.
So I want to get to your sort of like the way you frame housing as symmetrical, your symmetry of housing. I think you talked about it in your book. You've written about it on your blog. A couple things that I've heard, a couple framings of this housing crisis is one, that they're not necessarily that real incomes have diverged to the downside versus real housing prices. In some markets, maybe that is the case. In others, maybe not. But it's that the percentage of households across the board almost who are cost burdened by housing has gone up over time. And so that's one thing, and that's just I've heard that framing. I've done a good amount of digging on like what actually is the nature of this crisis everyone speaks of, and there are a million different answers for the question. Or the Cato Institute basically says there isn't one. The market's clearing, and to that point on the market clearing, we have seen a good amount of sort of this divergence in bid ask spreads in the market, where you have homeowners delisting or are unwilling to sell for some reason, whether it's like the mortgage rate lock-in effect, or is in a local sense in California, because that would portend a significant increase in tax liability, since they're grandfathered in via Prop 13 and things of that nature. And so I'm wondering, was there a housing crisis at a certain point in time post COVID? Was there one? Obviously, I mean, the great financial crisis was a legitimate crisis. There were foreclosures. The market froze up. There was no construction. But within, I guess within the post-COVID period, did that ever reach a crisis point in your view?
Well, before I answer that, I'll just pick up on
Mhm.
what you've said. You've kind of bundled in two things, and this is my frustration. I've been thinking about housing for a long time, that it's very hard to think clear about. You've sort of bundled in rising prices post-COVID as a crisis and falling prices post-financial crisis as a crisis.
Mm.
Which is it? Like, do we so, like, people keep going, "Oh, if prices were lower, that'd be great. Oh, you want prices 30% lower? Let's do that. Oh, no, it's a crisis if that happens." I'm like, "Well, hang on a minute. You can't just say it's always a crisis." Um, I mean, you can, because that's what history shows. The market is always at the limit of what people wanna pay, right? So we had Australia's, I don't know, there's a garbage truck there, if you can hear that. Sorry about that. We had Australia's first inquiry into the puzzling problem of rising rents in Sydney in 1911, right?
Mhm.
Then we had another one in 1919. Then we had multiple ones in the 1930s. This is not a new thing. As I said, this is the economic forces of the housing market. So, post COVID, what happened? Well, we did some silly things during COVID, like we put interest rates to zero so people could get 2% mortgages. We did that globally. I don't think that was, stimulating housing buying and construction was the right response to COVID,
Mhm.
but we intended, we planned, we designed higher housing asset prices and more home buying as a policy.
Mhm.
And we did that. And then we changed our mind and said, "Oh, we don't want prices to go up anymore. We don't want housing to be cheap. We want it to be unaffordable so people can't buy it." We put interest rates up. We did that to say, it's going to be more expensive. We don't want you buying and building houses. We want prices to come down. And we did that. And it's pretty funny because people go, "Oh, it's really expensive to buy a house now." I'm like, "Yeah, we're trying to make it expensive to stop you buying and building houses because we don't want inflation." That is what we're doing. And if you're calling that a crisis, well, I don't know how to manage the macroeconomy anymore, right? That's what we do. So, yes, it is an abnormal, cyclically difficult time to buy because prices haven't adjusted to the new interest rates. But that happens also quite often in history too.
Mm.
So, and you also picked up, you talked about this long-term divergence between prices and incomes and things. Again, if we want interest rates more broadly, remember housing's 25% of the economy. Housing assets in Australia are more than 25% of all the assets on our balance sheets. Then prices have to diverge from incomes. You can't have 4% mortgages and the same price to income ratio as when there's 8 or 9% mortgage rates. You just can't have it. There is no economy where you're allowed to trade houses where those things can be true, because prices have to be twice as high at 8 or 9% than they are at 4%. So, so that's what we've seen, and people keep going, "Oh, price to income's too high." I'm like, "Okay, if it's too high, then people will stop buying it, right?" Because the yields have compressed. Like,
Mhm.
you know, yields on houses are 3% in Australia. Okay,
So
well, if they're 7%, then prices are less than half. But they can't be 7% because you can borrow money from the bank at 4 or 5%.
So I
Right.
think this brings up an interesting conversation. We had a interview with Melody Wright. I don't know if you've interacted with her at all. She writes on Substack. And she's very interested in kind of like the financialization of housing. And to just summarize
Mhm.
my understanding of her view, I don't want to straw man it. It's kind of that, like, you're just, by financializing the housing market, we've injected like increasing demand into housing, and because kind of like the market is clearing, this just results in like driving prices like up. And I guess I'm wondering
But
if
hang
you
on,
think that.
just can I pick you up?
Yeah, yeah.
Prices up means yields down. So what we're saying is we're making housing make a worse return. Is that
It's
what we're
basically like the
saying?
government is like subsidizing injecting more capital into the market, and that's creating these distortions. Seems to be like the way I understood her story. Do you see any credence with that, or you don't really
Yeah.
think that that's.
Well, I mean, Freddie Mae and Fannie Mac or whatever they're called, they're designed to make mortgages for certain groups of potential buyers more stable and affordable. Um, Or more, that's basically meant to take the risk of mortgage holders, right? So in Australia, we
Mhm.
don't have that. So everyone's mortgage in Australia has just gone up. We all had 2% mortgages 3 years ago. Now they're all 5%.
So those are
And
mostly adjustable rate mortgages?
it's like we had a short period of fixed rates, like 2 or 3 year fixed rates, which you can get that now, 2 or 3
Mhm.
years fixed rate, but that's about the maximum. So everybody is adjustable after pretty much 3 years. And so what these national sort of funds do is they de-risk that over the long term for
Mhm.
mortgage holders in order to favor certain types of lending over others, which is again a good thing, right? Don't we want people to own homes, or do we want, as inequality grows, just a small batch of people to own the homes and more people rent and have lower home ownership? So if we want to shift home ownership, we have to change the balance of lending in favor of homeowners. So I'll give you an example, and I will answer your question on the symmetry,
Yeah.
which I forgot earlier. So in Australia in 2017, we had a inquiry, Royal Commission on Banking, and we sort of said, you guys are just lending willy-nilly. You're not complying with any sort of due diligence. And the response from banks was to shift their interest rate pricing so that homeowners got a better deal because they're lower risk, and investors got a worse deal and had higher interest rates. And what you saw was an immediate jump in the share of first home buyers buying the houses that turn over in the market because we tipped the balance in favor of a different type of buyer. Um, and then we also have things like stamp duty discounts. So there's a tax on property trades, and first home buyers get a discount there. So that also shifts the composition or the relative advantage of different types of buyers in the market. So that's a kind of a good and desirable thing. And can you call it financialization? I guess I used to talk about that idea, but I've gone soft on it because I can
Mm.
tell you, if you read the archives from the 1850s of land sales in Australia, when there's nobody here, everyone's complaining about financialization and the wealthy British coming to buy all the land cheap or bid up the price of land cheap for them and exclude the locals, right? And I'm like, okay, so it's just a never-ending renaming of how the housing market operates. So to get back to your symmetry question, though, William,
Mhm.
the symmetry point is this, right? People trade if it's mutually beneficial in markets. So sellers sell if buyers want to buy. And so if we housing markets essentially do all the positive sum trades automatically, right?
Mm.
And so if we are in the business of changing the policy settings to orchestrate a different price or a different quantity or a different place to live, we're going to create losers for every winner. There's a symmetry there. If rents fall, that's great for renters, terrible for landlords on a dollar for dollar basis, right? Because these are people's investments. They're their retirement savings, right?
Mm.
Um, same deal with the pricing. So this is why I think a lot of the debate is a bit fake, right? You can see it, like you can see a politician will go to an property industry breakfast and go, we're looking after the housing market for you guys. We're going to make sure the borders are open. There's lots of rich foreigners coming to buy your houses or whatever the case may be, right? And they're promising essentially higher prices, lots of people buying. I mean, I don't think these effects are large, but that's what they talk about. And then in the evening, they go to the homelessness organization. We're going to make sure that we're tamping down on prices and we're going to, how are you going to do that? By stopping buyers. You told the guys in the morning, you're going to get as many buyers as you can, right? You can't have it both ways. And yet this is how the conversation operates because no one wants to actually change anything because when prices are rising, we're sort of in this balance. We don't want to make it fall because everyone will say that's bad as well. And if prices are falling, I think then the honesty comes back, right? Um, we actually don't want prices to keep falling. That's like the worst thing for the economy.
Yeah, I think Arpit Gupta, the NYU professor, described it well. I think that if housing service costs were to just pace with inflation, I think that would probably lead to the most optimal outcomes for everyone. The way I see a crisis is sort of volatility in whether it's volatility in rates or volatility in price to the upside or to the downside. I think that sort of downstream of big moves in prices and rates creates dislocations that are persistent in the market. Would you agree with that?
So you would say the crisis is the fact that the cycles can be violent in prices and have macroeconomic consequences. Is that you? I mean, like again, this was the biggest economic topic of the 1800s, right? 5 huge boom and bust cycles that century, empires going broke, cities rising and falling. This is pretty normal. Now, one argument would be, well, you can dampen the cycle by constraining lending because that basically means that the rate at which people can adapt prices through these trades is slower because fewer people at any one time can borrow money and access the market. So maybe we can dampen it out. Again, the trade-off of that is I'm not sure that we want the trade-off there. There is a symmetry, right? When I teach economics, I always tell my students the answer to every question is what's the trade-off, right? Like there is no right thing to do. And that's especially true when we're talking about a quarter of the economy with the housing market. So but what we actually try and do with monetary policy is dampen the cycle, right? When prices are rising, we put interest rates up. And then everyone complains housing's too expensive, there's a crisis. Okay, well, do you want us you want us to dampen the cycle or not? Because if prices are rising, we have to make it expensive. And now you're calling it a crisis. And when it's falling, we bail people out, and people are sort of happy on that side of the ledger. But if you want to do it symmetrically to really push down, which we've all done, that's the outcome. And of course, the consequence of that is it makes there's fewer people rocking up to buy off the plan housing. And so you get less construction, which is, of course, the point as well. So, yeah, I'm with dampening the cycles. I wish I had a policy up my sleeve to do it. It's only been the last 200 years we've tried and not come up with anything. It's very difficult.
On that point, I do wonder if how normalized and standardized the 30-year fixed rate mortgage is within the U.S. economy, if that's an impediment to dampening the cycle. And for example, right now, it just at a surface level, it kind of seems like prices aren't really tracking rents, at least in the near term. It seems like home prices have really held up and not dropped very much, whereas rents have clearly turned over. And I wonder, and to that point, like it seems like there's kind of a lack of full price discovery happening in the property market. And if there were, if home prices were to eventually correct towards rent prices, then yields would go up, building would presumably resume or be higher than it otherwise would be, and then you'd start the new cycle, right?
Well, your first thing was about the fixed rate mortgage, 30-year guarantees. Look, I mean, if I just looked at the data on the US housing market versus Australia versus Canada versus the UK versus wherever, I wouldn't look at the lines and say, hey, look, that one looks a bit different. It must have something different about it. Maybe it's the mortgages. It would look just like everyone else's cycle. And every time you think you've got a rule that's really helping stabilize things, it doesn't, right? So in the 2000s boom, there was a huge debate here about, we have to do German town planning because the Germans have this federal law that allows all this stuff. And that's why, look at their prices. They're dead flat. And ours are going up and down. Oh, okay. Well, let's look into that. What happened in the 2010s? Bloody German houses boomed way more than Australian. I'm like, hang on a minute. I actually remember 5 years ago, you guys telling me their system is what's stopping houses booming, and now they're booming more than us. Now, just pick something. Like, that's just an admission you don't know what causes what, right?
Mm.
So no, I don't think that's a major thing. US cycle hasn't been abnormal this time around compared to anywhere else. So again, I think we're back to the original question, like, what are we complaining about? Are yields too low? Okay, well then people will stop buying because yields are too low. In Australia, yields have increased since COVID. They fell during COVID, now they're rising, as you would expect from the low interest rates not persisting and people trying to adjust to the higher ones. And we still think there's a crisis too, because yields are rising and people are recommencing construction, and the debate's the same. So again, I mean, I think there is. Maybe I should tell you what I think about the cycle, right? Cycles and growth periods are economically disruptive. The economy doesn't grow by everyone. Oh, here's everybody. Let's all just grow. Hey, great. Now we're all at the same rank. You know, if people are stacked up, but we're all richer. That's not how economies grow. Economies grow by certain people climbing up the ranks, certain people falling behind, and then moving up. And as we sort of rise, there's more people, right? The more movement in the economy there's more people falling down the ranks. Okay, this was what was called the enigma of progress and poverty in the 19th century, is that what we're having, we're so rich and we're having all these booms, yet all these people are falling behind. Well, that's just how we grow, right? We don't all grow evenly. There's people falling down as people
There's
grow up and
turbulence
down.
underneath the surface, right?
Yeah, so part of the debate is people who thought they were going to have a certain status and live in a certain area can't do it anymore, and they're annoyed.
Yeah.
And a mate of mine calls this like Plumber Joe, right? I went to university. I became a lawyer. I work hard and I can't live in this house in the street I expect. But Plumber Joe, who didn't do anything right, who was just a bloody plumber for 30 years, he lives in the mansion down there. That's unfair. I should be at that rank, and yet he's at that rank because he's older and he got there first. So there's a bit of that, and then there's a bit of just genuinely like the coexistence of this turbulence with people dropping out, becoming homeless, having to move cities, their industries going under, you know, the cultural elements of that. Like in the 90s recession, right? There was a cultural element of homelessness, addiction, all these types of things that all bundle together with the economic cycle. So there's definitely a combination of those things that we see. Now, you can have sort of a non-growing economy that's very stable, but then we wouldn't want that either. You know, we can have welfare systems that kind of bring the bottom up, which is what I propose with public housing options for everyone. But again, that would just be a small part of the economy catching, in Australia, because we have 70% home ownership. I think in the US, it's about 62%.
Yeah, it's like
Is that
60
right?
something percent. Yes.
Which fell after the financial. So prices got cheaper after the financial crisis, and home ownership went down. And everyone will go, "Hang on, which do we want? Cheaper prices or higher home ownership? Why aren't we getting both?" So yeah, that's sort of my view. Is you end up with a sort of broad housing safety net, which catches about 10% of the households.
So I want to dig into that, but before we dig into the public housing stuff, I want to ask you about another version of the crisis, like another version of what people think this could look like. So there's like, I don't know if you're exposed to Glaser, any of the Ed Glaser research. It seems like one way you could characterize the crisis is that there's not construction happening where there's demand for construction. Like when I look at the United States, for example, there's huge demand in New York City, and there's not very much construction relatively happening there. There's enormous amounts of construction happening in Texas, and that's maybe not where like people want to move. And so maybe the market's clearing, people are getting what they can afford, but there's this like spatial misallocation where people aren't being able to move into the cities that maybe they would be most economically productive because of rent seeking by locals. So that's like one version of the crisis. Do you think there's any credence to that at all, or you view it with some skepticism?
How do we know this spatial misallocation?
Yeah.
That there's different prices in different cities? Well, I mean, that's always the case everywhere. So how do
Yeah.
we know? I mean, that's basically the underlying logic. And if you pick apart Ed Glaeser's cities, Ed Glaeser's analysis on this, it's pretty basic. It basically
Mm.
says we could all live on a pinhead and pay the same price if we wanted to move to the same location, right? And we'd build such a tall tower that the rent here would be the same as everywhere else in the country. And I'm like, that doesn't even make sense to anybody, right?
Yeah.
So he's got this odd view that prices should be the same everywhere. And I'm like, but I don't understand. Like, you're basically assuming away the thing that you're apparently interested in, which is cities and agglomeration effects and the value of those locations. So yeah, it's just a really bizarre analysis. So yes, some cities are expensive and some are not. And
Yeah.
if they were cheaper, more people would go there because the
Yeah.
equilibrium of the rents is that exact amount that allows the exact amount of migration in and out, right? Because
Yeah.
people always go to me, "Oh, we should build more houses in Sydney." Okay, so if rents in Sydney were cheaper, everyone would just enjoy cheaper rents, or the rest of the country would move there because it's absolutely beautiful. And if you can rent there for 20% less, why would I not move there, right? So that gradient has economic information in it, that rental gradient. I call it the spatial
Yeah.
equilibrium, right? But it doesn't tell us information about the regulations and rules in a city on building. And I'm very open to modernizing town planning, getting rid of things that are outdated. But just all the analysis around this is just terrible, right?
Yeah.
Think about the productivity, productivity is bad in construction. I'm going to blame town planning. I'm like, but that's not even related to how we measure construction productivity, right? You do town planning, you pay engineers, you pay planners. Guess what? That's in the professional services sector, right? Those costs are not in the construction measurement. The construction measurement is just literally people who show up on site to build things. And the funny thing about that is, if we get more productive with prefabrication things, guess what happens? The prefabricated part is classified as manufacturing.
Mm.
It's not in
Mhm.
construction. It's basically a classification game of all the productivity gains. If you're in a business that does productivity gains, we're going to call you manufacturing. Tick. If you're in a business that's not getting productivity gains, we're going to call you construction. Oh, I wonder why there's no productivity gains in construction. I mean, honestly, if you dig in the data, that's where I have like a 3-part series on fresh economic thinking explaining this, and it blows my mind. We have a federal commission called the Productivity Commission that did this analysis, and they did the Ed Glaeser thing of, oh, it must be town planning. I'm like, it's not there. It's not related. And guess what? If planning prevents tall buildings, you're gonna get lower cost housing because it costs more to build taller on a per saleable square meter basis, right? And so I'm not sure, and if you build lots of tall buildings, we're going to end up devoting a lot of money and resources to the same area of houses. So
No, yeah, that's fair.
anyway,
It's
this
a,
whole thing
it's a,
is confused. Don't take a spatial equilibrium relative pricing as evidence of anything, because you can't have rich, beautiful areas, cities, be the same price as everywhere else. And that's unfortunately the logic behind Ed Glaeser's analysis. And if you push him on it, get him on the show. I'd love to hear how he wiggles out of it.
Yeah, because it's something I've personally thought about, that like low prices, are traditionally thought of as like an indication that the housing market is like functioning well, right? And in many places in the United States, at least, I don't know internationally, low prices are like an indicative of like very deteriorated economic conditions in a location or something like that, right? Like no one looks at Detroit and thinks that this is like an environment where the housing market is functionally well. So it's something that has similarly been a pet peeve of mine, when thinking
Yeah,
about this.
I mean, if the economy's going, if you're rich, so here's a good. Do you know about the Henry George theorem that
Mhm.
Joe Stiglitz said, well, how much if you had the perfectly planned city, right? If you had a company that owned a city and it perfectly planned it, it internalized every externality, and it maximized the quality of life for residents, it would be the most expensive city. right? Because it would be the best. It would have the highest quality of life, so people would pay the most to move there. So if town planning gets it right, you end up with beautiful, rich, expensive cities. There is no
So
beautiful, rich, cheap cities.
so I want to pull on a few threads. Um, so let's imagine San Francisco. I mean, that's the classic example. I think it costs $300,000 to afford, or that's the income, the annual income required to afford a home there. It's the most expensive city in the country, at least. Um, I think there is pretty strong evidence that I've seen that maybe maybe conservatively, like 5 to 10% of costs associated with constructing new housing there, whether it be multifamily or even single family, come in the form of some regulatory tax. Um, let's say that that regulatory tax is lifted, it's upzoned. Would it not be the case that under the assumption that you're not going to get new building starts, you're not going to get uh, you know more housing production unless there is rent growth, unless it is in an upcycle. But would it not be the case that if that return profile for developers was improved, that during the next upcycle you would see a higher responsiveness to increased demand or population inflows, et cetera?
Um, so two things on that. Firstly, this whole regulatory tax thing is just made up gobbledygook, right? Like there's taxes, there's regulations. You can't just go, oh, this is another Ed Glacerism. Is just like, I'm going to say this two random things are just equivalent and I'm going to make something up. And honestly, I've spent 10 years trying to comprehend what he said. And when you dig to the bottom, it is just nonsense. So there is this idea, for example, I mean, we have it in Australia, there's a tax of 3% when you buy a home, right? Which seems like a lot, get rid of that. Prices should come down 3%. Well, they don't, right? Because if I'm a seller, why would I just take 3% less if the market price is $100? Why would I sell for 97? I don't have to sell. I own the property because I want the returns from it. And 3% is not much because we pay real estate agents that much as well. And maybe we should get rid of them. I don't know. I'm all for that. Um, so, but behind this argument is that the cost of construction is somehow related to the price or the quantity of dwellings, right? Now, the cost of construction is cheaper now than ever. Right? If you just go back in time, you'll find that we have bigger, better houses, more air conditioning, more bathrooms, you name it, we have it. So what do we do with the cheaper cost of construction? We make bigger, better houses because we can add the extra room, the extra floor, the extra this. We don't build more houses than we need, right? There's a finite number of households. They're not going to reform and have one house each, right? Okay, so we're not gonna have double the number of dwelling units, but we might have double the number of dwelling square feet in the same number of dwelling units, and we all enjoy more space, which is basically the story of the last 40, 50 years. We have twice as much space, but we don't want more dwellings because we just want bigger ones because we want to live in the families and households that we form. So would it accelerate construction? Well, the assumption there is somehow price is related to the construction cost, right?
Well, that marginal profit, to the extent it exceeds marginal cost, will induce more construction. That's the idea.
Yeah. So the cost, okay, so the decision to build a house, the cost is not the input cost, right? The cost is the foregone benefit from waiting and building at a future time period,
Mhm.
right? So a lot of people just go, oh, well, if you get this prefab or you do whatever, or if you accelerate, if you can compress construction timelines, all this magic will happen. Well, I can tell you the magic already happened. If we go in a time machine and tell people how amazing we are, they will their minds will be blown about how good we are at building houses. Um, What we do with lower costs is we build more density, but we don't build quicker because it doesn't change the trade-off from waiting for tomorrow to build. That is the main mechanism that regulates how quickly the market provides. Right? So if we do a level change, that doesn't change whether building now or building tomorrow makes me more money. It also makes me more money tomorrow if I wait. And so it doesn't change that trade-off. And this is like the huge issue is people, you know, and it was true for me for years, right? Trying to comprehend the housing market, the cost is not is like the foregone return of the assets you own that you need to recombine, right? So land, people always say, "Oh, this delayed development, therefore it makes it more expensive." I'm like, no, owning land and not developing in the equilibrium gets you the same return as building, right? Because
Right, but
that's an asset.
if that delay is within the time frame of leverage already being sort of taken out, then it ultimately would lower the sort of the return profile for that project.
Yeah, but also in the future, if I don't build it today, right? I can
Sure.
also build
Yeah.
faster in the future, but because when I own the land, I haven't spent the costs on construction, right? And in the equilibrium, I'm waiting on vacant land is going to make me the same, right? The vacant land is a leveraged sort of exposure to the underlying asset, right? It's like a financial option.
Hmm.
And so in the equilibrium, it returns the same amount. I'll give you an interesting example, right, of this in action. So we had a public housing provider in New South Wales that had all this very well-located public housing, 100+ years old, and they decided, "Oh, we're gonna sell this off, we're gonna kick out the last people, and we're gonna spend the revenue building more housing here." And that got delayed. They thought they were gonna earn something like $400 million selling all these assets, right? It got delayed 5 years, in administrative red tape, change of government, all that sort of stuff. They eventually sold it 5 years later. That was a costly delay, right? No, they sold it for $710 million, right? They if the market's growing because the economy's growing, then waiting pays just as much as going. And so it's the change in the returns that stimulate those adjustments. If you do a policy change that sort of makes things better in the future, the same as today, then you might see some temporary adjustment effects, a reordering of which projects get up because they're different sizes or whatever. But you're not going to see we're going to have this same conversation in 10 years.
Hmm.
Sorry, go on.
Well, I was just going to say, like, back to San Francisco, and I'm not, I don't think any of your claims were objectionable. I just the idea that if more supply could come online, be that even market rate or even luxury supply in the form of multifamily, let's say. I wanted to get your take on this idea of the filtering effect that that perhaps that could unlock more affordable supply down sort of the affordability stack. And with in the back of our heads, this notion that maybe to some varying extent, there's John Doe sitting in the Midwest who's an extremely bright guy, well educated, underperforming his income potential, and therefore like sort of at the macro level creating his minor drag on GDP because he is a spatially misallocated resource. I know that might be a triggering phrase for you, but do you understand the scenario? So, like, what do you say about that? One, the filtering effect, and two, this idea that like if people, if John, who doesn't have, isn't well endowed, his parent, his family doesn't have a lot of money, he's kind of just like pulling himself up by his bootstraps. But if there were some more affordable supply in San Francisco unlocked, that he would be able to move out there and reach his full income potential.
Well, starting at the end, yeah. If the prices was lower, more people would move there until they bid up the price back to where it was, right? Like, you're basically saying exactly the reason why your prices can't come down, because people will move there. Like,
Yeah,
you know,
yeah. There's
They
so
would come down. They would come down where the person moved out of, right? Like you would have this like I'm just thinking. I mean, granted, housing is not like every good, right? Like you can't compare it to TVs necessarily because it's not tradable in the same way. But I would like
Morning.
there would be some reallocation, right? And so then like the person would be leaving, and like they would open up their old house that they used to be living in the Midwest now.
Yeah, they would. And so there'd be someone moving there, and then the person who moved there might not buy the off the plan house in their Midwest town, and so there'd be one less house there. So you just all of it just is spatially reallocated, and the price gradient's the same. And I guess the question is, do we trust that the market? Do we trust the market pricing of, San Francisco is rich. I think you got to understand, and this happened, it happens to me all the time. I go to events and I talk about housing, and people go, "Oh, isn't it sad that it's so expensive in Sydney? I got to pay $1,000 a week or something." And I'm like, "Yeah, it's pretty expensive, don't you think?" They're like, "Yeah, I run this side business where I do these Airbnbs and I've got all this." And I'm like, "Okay, so it sounds like it's cheap for you. It sounds like everyone's just rich here, right?" Like, it happens all the time. People go, "Oh, isn't it sad that people can't afford it?" I'm like, "But everyone I bump into is rich.
Yeah,
I can't find the poor people. We've got this imaginary person." And here's the thing, right? If that guy wants to move to San Francisco, he can just share a unit or a house with one extra person, halve the housing cost, halve it. And if you are not willing to move there and share with one person to reduce the housing cost by half, maybe there's not an economic value to you moving there, right? Or maybe you've got
mm,
weird personal preferences that maybe you need to live in the Midwest in a big house on a farm. I don't know. But, we adjust for these things. And some of these other adjustments are much bigger in effect um, than, I don't know, you build a few more houses, more people come. I don't know. If we get richer in a bigger city, if San Francisco doubled in size, but was just as rich, I mean, I would say the housing crisis would be worse, right? Right? Because bigger cities, it's worse. There's more agglomeration effects, more niche, high value locations and suburbs and clusters. I just can't envision this big, rich, dense, successful city that's really cheap. It's just not economical, right? Um,
there was a thread from
so
earlier in this conversation I want to pull on where you had briefly mentioned public housing a little bit, and this ties me into
mm,
where you see the role of the government in the housing market, and just if you want to talk about that a little bit, I'd be very interested.
yeah, okay. So I might pick up on this. I'm just going to inject my own flavor here. I
there you go.
remember you spoke to, was it Arpit Gupta?
That's right.
We did, yeah.
Um, and he said the interesting thing is that the rent to income ratio in most cities for most of history is a flat line.
Mm,
Remember? And I always point that out to people because I say, there's an equilibrium effect here. There's all these adjustments we make, whether we have more houses or fewer houses or bigger houses or better houses. It doesn't matter. We're just going to spend up to this by trying to climb the location rank if we have excess income, or move to a better place, or have fewer people in a household. So, that's, a really interesting observation, that we have more bigger, better houses with fewer people in them and the same rent to income ratio. That seems like a success, right? To me. But I want to now take you back to the 1920s, and I know it's a history lesson. If you go in my book, you get the whole historical context. In the 1920s, the rent-income ratio in the US was also the same as it is today, 26%. But where it wasn't was in Vienna, Austria. It was 5%.
Mm.
Was 5%. And the question is, wow, they must be doing something right. They must have had lots of supply, right? Everyone must have loved that housing market. No, they didn't. They didn't have much supply. Their houses were not in good shape. There was all this First World War shadow over the economy, but what they did have was a bunch of rules that prevented people trading and relocating their rental home. They couldn't move out of where they are and move in somewhere else and negotiate a rental price. You had to go to a central city clearinghouse and say, I need a bigger place. I've just had twins. Our family is enormous now. And they would say, okay, when someone comes to me with a bigger house who wants to move or who's died, I will swap you into that without a market price. But you guys can't go and negotiate the prices yourself. In that way, everyone's rents stayed low, but people hated it because they couldn't trade and move to the places they want or the suburbs they want or the places they want. So preventing trades is what keeps changes prices from what they would otherwise be, and those prices are linked to the whole essentially national market at the end of the day, with some cyclical variation. So how do you get people who you want to get into cheaper houses, because you don't want everyone into cheaper houses? 70% of people are homeowners in Australia, and it's maybe near 60-something in the US. They're fine. They're happy. Out of the rest, most of them probably are going to be homeowners soon. They're just young, whatever. They're probably fine too. So you've only got this sort of 10% of the population that is in the private rental getting squeezed, might not own a home in the future. What do you do with them? Well, they're adjusting themselves. They're relocating. They're pooling their resources. Grandma's living with them, all that sort of stuff. But you can also just give them a house, right? If you think it's a problem, we can all chip in and give them a discount on a house and something stable. And that's where I land. If we think there's a crisis, the crisis is not the guy who's going to have a successful San Francisco IT career, but has to share a house for 3 years. Like, do we? What are we? Is this the person we're reorchestrating our whole public policy for, or are there people who are hardworking, living in expensive locations, but can't stick around in Sydney? And I think socially, people talk about the nurses and the teachers and the policemen in high value cities, right? Oh, it's bit of a pain if we want public schools in these cities, can't pay them more, and they got to commute from the next one. Now, we can solve that by paying them more, and I'm sure that happens in the US. I'm sure a teacher in a high-value area of San Francisco gets paid more. Same is true here with teachers, doctors, nurses, etc. So we sort of do it like that, but you can also do that in the form of subsidized housing. And when I look at cities around the world that are expensive, highly successful, rich cities, but also have the sort of stable working class housing, they generally have a huge amount of public housing.
Yeah.
The extreme end is Singapore, which has 80+% of people live in a publicly built house. It started at 20% at independence. They had 20% home ownership. Now they got 90% or 89%, and predominantly that's because it was just a national effort, like the highway construction national effort in the US. In the 60s, they had a House the People national effort, and everyone just got chucked into one. You could do that on a small scale in certain cities, and that you're worried about, to qualifying individuals for whatever the social, or political criteria might be. And that's where I end up. Like, if you end up getting 10% of people into some stable non-market housing that they can leave if they want, I think you've taken the edge off those periods where there's a lot of price growth and a lot of reordering of rates. You've sort of gone, well, there's a backstop here. You can, we'll find a place for you. That's where I end up at the end of the day. There's such so little we can do to manipulate the broader housing market, and if we do intervene, people are not going to like it. So, for example, you can make the sticker price, the asset price of housing, lower by taxing owning housing, like Texas property taxes are 2%. Are people going to like that? Because that's, again, the symmetry says you're making a loser for every winner, right? And if you look at rent to income ratios in Texas, it's no better than California, right? So it's just the sticker price is different, because instead of $1 million mortgage, you need a $500,000, and you need to put $500,000 in the bank to earn interest to pay your property tax forever, right? So, of course, the sticker price is lower. Now, we can do things like that. For example, in Australia, we think if we taxed property owning more, then retirees would downsize because they wouldn't have these big houses and because they've got to pay the property tax. Okay, we could do that, but then we might have to sort of pay their property tax through the age pension. So we have a public age pension, which, around 40% of old people get. So essentially, we're going to have the federal government pay these retirees extra money so they can pay the state taxes, right? Or they're going to move, in which case it's going to be all over the news. Oh, poor grandmas forced out of their homes by nasty new politician with their tax. Okay. So what do? We end up in square one. Okay, we're just going to wait for old people to die for the turnover. We're not going to get them out at age 70. We're going to get them out at age 80-something when they die. Fine. So yeah, it's just really hard to do anything that wins. Wins. Well, we don't know what a win is, right? Like, because of the symmetry. Anything to dramatically change the price or the quantity of homes. There's just not much out there, right? So, if we
So kind
find
of like
someone,
because you can't do that directly, there's like this benefit in just finding the people who lose out and just like directly subsidizing like their housing option. I have a follow-up
basically,
question to this. Do you see building public housing and like rent control as like perfectly substitutable policies? Is like one vastly superior? It seems like everyone hates rent control, but I'm just interested in your thoughts on this.
I mean, public housing is rent control for a different owner, right? Like, the so if you do rent control on other people who've made investments, they're going to get upset, right? But if you do it as part of a policy package, knowing that that's what you're doing, then it's different. I think the modern rent stabilization is pretty good at also addressing some of the frustrations during those periods of rapid economic change. So I'll give you some examples. So, for example, typically in Australia, I don't know how it all operates in the US. You'll get a 12-month lease for your dwelling, and so that commits both the landlord and the tenant to that lease, right? So if the tenant breaks the lease, they're obliged to pay for a certain period because they signed that contract. So at the end, though, you can just put the rent up to whatever it is, right? If you're in a booming suburb or the Olympics are coming or whatever it might be, there's no limit to that. And if you don't like that person for any reason, you can kick them out. So what we have considered is limiting the rate at which you can increment the rent on the same tenant to a certain local price index. So if you're in one of these fast-growing areas, tenants don't get these 20% jumps in 1 year. Now, I think that's sort of the way to go, because what you end up doing is you smooth out. So rents near me probably went up 30% in 2 years, 15% a year, roughly speaking. And so if we had a rule that said you can only do CPI plus 2% or something, 3%, that 30% would have had to be spread over 3 or 4 years, right? So it wouldn't massively decrease your overall rents, but you'd basically, instead of the rent going like this, it would go like this and get to the same spot in 4 years. I think stuff like that is helpful and addresses much of the frustration that we had. There's a big reorganization of people into different cities during COVID and after, into certain regional lifestyle towns where rents went up a lot. That would smooth that out a little. And it's quite interesting because we have rules like that for landlords in Australia, right? So if you're a landlord, you pay property taxes every year, but we have a limit on how quickly we'll put your property taxes up to market rate, right? So even if your property goes up 50% in value, we won't put your property taxes up 50%. We'll average out the value over the last 3 years, right? So that if it's been flat and then goes up 50%, you're only at whatever, it's 16% this year, 16% the year after, 16% the year after. We'll smooth it out for you because people hate unexpected changes to their cash flow. But I think those sorts of rules, very common in Europe, starting to be adopted in Australia, can sort of take the edge off that. But the whole fix the rent forever, if you're going to do that, you probably want a public agency, a non-profit. Like, you want the owner of the building to be in the business of subsidizing tenants, right? And so I think politically that's the best way to go.
I want to zoom out and again, it's sort of touched on the YIMBY movement, the abundance agenda. I understand that in a lot of ways you sort of reject the broader premise, but on the periphery of these things, like what do you agree with that you think they may be getting right? Maybe it's like the sort of legalization of accessory dwelling units, the minimum, the doing away with minimum parking requirements, maybe a focus on infrastructure and transit. What do you think that they have right?
Yeah, those things. A lot of those things have been adopted here. It's quite funny because in Sydney or Melbourne or Brisbane in Australia, the YIMBYs are sort of reflecting what's been happening more than driving it on those areas specifically. Right. So in Sydney, they got rid of minimum park. They haven't had minimum parkings in high value parts of Sydney for a long time. And in fact, because parking is so expensive now, because there's hardly any of it, there's maximum parking rules because a car park costs like $150,000 to go and buy. Right. So you can sell a car park in a parking garage or in a building. And because they're quite expensive, if you're building a new apartment tower, and people are willing to pay 150,000, but it costs you 50, you design in a lot of car parks because you don't want to give up the money. So there's maximums there now. The accessory dwelling units, I mean, about nearly 20 years ago, where I am in Brisbane, we enabled granny flats, we call them. That's been going for 20 years now, and there's a few around, and the rules keep getting relaxed as people get more comfortable with setbacks and sizes, so there's lots of good things, and I think they're right to push back on certain areas. I think they're wrong to think what they're doing is making everyone's houses cheaper. And it's really interesting if you go to New Zealand, right? There's a big recession in New Zealand right now, and prices have fallen a lot, and it's pretty weird. I'm like, oh, are the YIMBYs going to take credit for this? Because they keep telling us that was what they're going to do, and you've had this big recession and prices have fallen. Is this a success, or we want prices to actually go up again now? So I think the broader picture of we're going to change the number of houses that exist is wrong. Yes, I think the best way to talk about town planning is it regulates where things go, not how quickly or how many there are. And we need a system to do that, right? Town planning exists in every city. It evolved everywhere for good reasons, right? There are noise, shadows, reflections, smells, vibrations, accessibility. Like, the externality package of a city is enormous. And we can litigate that through the courts the old-fashioned way, or we can just set some simple rules and go, hey, if you comply with these, do whatever you want. If you don't, we're going to have an argument. And that's sort of how the systems have evolved sensibly. Now, yeah, some are outdated. It's 2025, not 1955. Fine, let's do that. But I've been involved in property development for 20 years, and 20 years ago, the planning profession was all about minimize car parking, transit-oriented development, get with density, dual occupancy. 20 years ago, the planning profession was saying similar things. So fine, good on them for being involved. Go nuts. But I think what will happen is they'll converge back to where we are politically in the planners. And I think it's more heated in high-value suburbs and high-value cities. So in San Francisco in the United States, obviously that's like the big deal because that's where all the rich people are, and their problems are more important than everyone else's. So that's where all the attention is. And that's true in Sydney as well, right? But the rest of the country is just plodding along, doing fine. The planning rules work. It gets what people want. I just think, this confusion between density and quantity or rate per period, rather than dwellings per land area, dwellings per period of time across the city is just fundamentally behind a lot of their major claims,
Mhm.
right? They keep going, oh, here's a car park. Now there's 20 dwellings. As in, you mean there are 20 dwellings at this location that the people living didn't buy off the plan of a different project at another location. That's great. That's right. We've relocated people to this spot. If that's your objective, that's great. If you think we've suddenly got 20 more dwellings across the city than the counterfactual because there were no offsetting effects everywhere, then you're wrong, right? Because
Mhm.
if I buy an apartment off the plan for you, I'm not buying it off the guy down the road, and he's not going to build till he's sold them off the plan.
Mhm.
So,
What do you
yeah,
think?
the YIMBYs are fine, but they just seem to hate me for some reason because I tell them
I
density
wonder
and
why.
quality per period are different.
Um,
Like, I don't know, it's an identity thing, right? I'm totally over that now. It's not an
totally.
identity. I just if that's your identity, that's a problem. I'm just like, I just want to be the guy looking at housing markets. I've tried to understand them for so long, and I've gone through the cycle of, oh, it's all financialization. Oh shit, no, it's not. Oh, it's all this. No, it's not. Oh
Yeah.
God. And I'm like, oh, it's just markets doing market things, and we should just step back a little and understand it.
Let me ask you to look around a corner and in the wake of like SB 79 in California, to the extent you're familiar with the sort of raft of pro YIMBY legislation that passed in California, the transit oriented development, which Alex Arnovich calls the missing massive, of putting high rises near transit.
Yeah.
And then let's take this like to its limit, where let's say the DC MBs have similar outcomes, the city of Yes in New York, and all of these major sort of superstar metros sort of deregulate everything and get their wish. What do you think happens? What are the downstream consequences of that?
I think if this happens and we have this conversation in 20 years, we'll be like, oh, look, there's different sorts of housing in different locations to what we used to get. That's it. And we'll probably go, geez, it's expensive. I wish we would have upzoned more. When in doubt, upzone harder, right? Like, I honestly, that's where it is. Like, because when you say if we get all our wishes and we densify and we do all that, this is literally what's happened the last 50 years. Like, it's very hard to comprehend, but if we go back in time, because I studied town planning in 2003, right? And then we were studying the changes from the 80s and 90s and why we're at this point in 2003. And literally, it was just exactly what Yimby said. Smaller lots, more density, more flexibility here. Get rid of these 1970s rules, so on and so forth. It's literally what was happening for 20 years before the 2000s boom, and has been continuing to happening, and now has this identity badge of Yimby. And yet here we are. So the idea that, oh, if we just keep doing what we've been doing, it's going to be different is a little bit weird to me, right? And I think if we zoom out, a lot of these contentious suburbs in high value locations, I mean, it's such a tiny part of the overall market, right? In the United States, yet it attracts such a disproportionate amount of media attention because everyone lives in Berkeley or the Silicon Valley or something, and they're the important people. So we talk about their local politics. Local politics happens everywhere, right?
Mhm.
Like I'm in my community group and everyone's upset, but there's towers going up slowly, but around, and it's fine. But there's conflicts. It's genuinely true that there are use conflicts. There's noise, reflections, vibrations. I mean, I'm looking at a tower now. All these people can see me get changed in the morning now, get dressed. I had to put a thing over my bathroom because everyone can look at me have a shower now. So these are real things, and it's not a high cost to adapt, but the planning system exists for a reason. And I think if we didn't have it, it would be almost instantly recreated from scratch, politically within moments. And that's what the argument is in Texas, right? Houston apparently has no city planning, and all it has is private planning covenants, and everyone's like, if we're not having city planning and we're doing a subdivision, we're going to make sure we have such strict rules and
It's locked
gated
down.
community. Otherwise, it's all these conflicts arise.
So stripping away kind of like people complaining, because I think that's always like a perpetual feature of life, right? It does seem like, yes, people would complain still in the future in this world where there's now a whole bunch of like high-rise construction. But by removing these restrictions from like an economic perspective, everyone is better off because people are able to move into these places that they might have wanted. So it's like the example you gave is like in the 1890s, people complained. Now everyone complains. But I think undeniably we're better off because like everything is better now. So I wonder how you think about that, kind of like stripping away noise and just thinking about outcomes.
Well, I mean, if you're a market purist, and I guess I'm an economist, so I appreciate the market logic, and that if you have a rule that prevents a trade that would otherwise occur, then someone's being made worse off. So if someone's going to build a taller building and trade their money for it building up, then you're preventing that. Someone's going to be worse off. Now, the answer to that is, the whole point of the planning system is that the external costs are very large, right? So, I mean, imagine if I built a 200-meter tall concrete cube in my town, right? Like and the guy next door is like, "Oh, great, you've just blocked for you guys, southern sun or whatever." What is he allowed to do that? Like, what am I supposed to do now? My solar panels don't work, right? I'm in the shade. I can't grow grass. There's just a lot of externalities. The list is as long as your arm of these things. So we do need something. Now we have an example of your no density restrictions, do whatever you want. We have the Gold Coast, which is like the Miami of Australia. And there's no height restrictions, no density restrictions, no nothing. And you're not going to guess which city prices and rents grew the most since COVID, are you? You're not going to guess that it's the Gold Coast. It's just the Gold Coast by a country mile.
Yeah.
And so I'm like, well, what else can you do? Right? There's nothing else you can do. So yeah, I think town planners. So to join the Yimbys in town planner bashing for a moment, they have a good feel for, we're managing all these conflicts, but they can't articulate it well. And sometimes they just like their rules because they came up with them and not because they address some conflict or externality that is important or meaningful still. So I definitely get that vibe. But again, I think that planners are actually pretty good about this. It's actually the democratic process of the community, right? Planners can't just do whatever they want, right? There's city elections and democratic processes. And I think that's where probably they're doing a good job communicating stuff. Like density can look good, it doesn't have to be like this. Car parking can be addressed with metered parks and congestion charges. These are quite valuable contributions to the debate. So I'll join them for a moment as well.
If I'm understanding you correctly, basically you're saying that like all these externalities exist, the planning communities have arrived at them endogenously to solve like real problems, and the solutions they have are pretty good. And so when we come in and we like deviate from them, like, yes, you might have more construction, but you might actually be like deviating from a good endogenous solution to these externalities.
Yeah. So, and I think you only find that out through trial and error.
Yeah.
Unfortunately. So, for example, we had a bunch of crappy 1970s towers in Brisbane where I live, and then immediately the whole community is like, we have to look at this forever now. We have to deal with this thing. Let's tighten up those rules. So I think it's good for NIMBYs to create this, to have a new experiment of let's remove some of these, see what happens.
Yeah.
And if some of the stuff we don't like, we'll have new rules later. So I think that's a necessary part. That's like this sort of creative destruction of the rule base. That's fine. That's good. Like cities do that. From time to time, they'll do precinct plans where different stuff is allowed to happen and see what it looks like. And if people like it, they go, okay, everywhere that looks like that gets these rules now. So that's unambiguously a good thing. But again, the density versus quantity of houses. Yes, you're going to get houses in different locations. That's what the rules are for. But the idea that people are going to somehow build quicker is not true, because the benefit of waiting is unchanged as well. And what accelerates development on average is the trade-off between waiting and going.
Mm-hmm. Do you this is my last question, and we're kind of coming up on time. Do you lend any credence to the idea that that there are sort of missing typologies in housing that are putting a cap on fertility in the U.S. or the rest of the developed world? And then, taking that a step further, what if we overbuild? 20 years from now, there's these massive demographic shifts. If we go too far with the deregulation, or like just this obsession with building at, no matter what the market conditions are, do we end up like Japan in the 80s and the 90s and 2000s?
I don't think people won't build no matter what the conditions are, right? Like that's not an outcome. There might be speculative periods where
did they not in Austin?
Yeah, they build if people buy them, right? Right. The builders aren't just building. A good analogy is like cruise ships. Just because you can build a cruise ship doesn't mean you will. You buy it to order. People order it and then you build it. Right? That's how housing works. The spec building is a small part of the market, and it's generally very like, oh, we're going to stop now. We're going to slow down. And it's slower than other asset markets, but if you zoom out, it's pretty responsive. Yeah, you can get overbuilding bubbles, but you can get overbuilding bubbles in different sorts of regulatory markets as well, in terms of town planning regulations. I don't think that's much of a factor at all in those bubbles. In terms of the fertility, look, fertility is, again, everyone thinks it's happening to them, but it's a global issue, right? Again, these housing and YIMBY debates are a global issue. The prices in Germany went up more than California, and they've apparently got the great town planning. So yeah, it's always good to remember there are bigger economic forces than our local political battles. Same is true with fertility. Look, we will respond. The market will change. If we build a lot of apartments and people start wanting to have big families, they'll either have big families in apartments or move out, and the premium for apartments and those locations will go down. The prices will adjust. I suspect actually there'll be a bit of a fertility rebound in the coming years. A bit of a pendulum swing on social norms and status. But we'll see. I'm not as panicked about it as most people. I think things correct themselves over the long term. And I think I'm optimistic. We just got to remember, the long-term trend is up, but it's not a straight line, right? We've got to get through the cycles. And I think that's true with, fertility things as well as housing markets.
Mm-hmm. Well, it's been a fascinating conversation. It was very nice getting to talk with you and getting this perspective. Just like yesterday, we had a conversation with Jess Remington from the Economic Innovation Group, and she had exactly the opposite perspective, that it was all it was all housing regulations and stuff like that. So it's I mean, one of the big benefits of doing these interviews is we want to try to get all the angles. So I really appreciate you taking the time to talk with us. And if anyone in here hasn't subscribed to Cameron, y'all should definitely go do that, because he makes some pretty amazing stuff. So thank you.
Yeah, great. See you all on Fresh Economic Thinking. Thanks, guys. Love your work.
Thanks, guys.